All right, welcome back to the final round here on Yahoo Finance. Miles Upland with you in New York. And we're joined now by Keith Lerner. He is the Chief Market Strategist at Truist SunTrust Advisory Services. And Keith, I want to get right into your latest note. And I don't know if I wouldn't say it's complicated, but if, the stat that you call out, 90% of stocks in the S&P trading above their 50-day moving average. It's essentially saying that the momentum in the market to the upside is very strong right now. And I mean, your data shows that historically, this is a bullish sign, a very bullish sign for stocks over the next year. When you uncover this kind of data and you share it with your clients, do you get a lot of pushback that, hey, man, what are you talking about? This market's overheated. Stocks can't keep going up. What are you saying?
Yeah, well, it's funny. I don't get too much pushback, and we don't only rely on one indicator. But I will tell you this, and we put that out last week on Wednesday, and it sounds complicated, but it's really not. It's basically saying we have the majority of stocks rising. And historically, when you get to a really strong momentum signal, when you look at 12 months, we've looked back and the market's been higher 14 out of 15 times. Another thing is, these type of readings tend not to happen during bear markets. So you've never saw this during 2008. And what's also important, we dug even deeper. And when you go from a very oversold or where everything's moving down to everything's moving up, that's bullish. So our base case is that we are in a bull market. I will say, short term is a more difficult call. I think it's a more mixed because you are seeing a big move. You're seeing put to call ratios show a little bit of complacency. But folks that have a 12-month outlook or longer, it suggests that you should stick with the trend and that we're in a bull market.
And I guess, Keith, kind of more broadly talking about the market strength, and, this is just one way to slice it. But I think a lot of people have taken a variety of different looks at the market, and most fundamental and technical indicators say that, the market looks strong right now. What seems to be the most common piece of pushback that you're hearing or still seeing? I just keep seeing, the market's diverging from the economy, but that story hasn't changed in 8 weeks. Is there anything new that you're seeing from the skeptics on why they view the market as actually weaker than what the price says?
No, I think it's what you just said. It's still the disconnect. Up until last week, on a 4-week basis, so the 4-week sum of fund flows from retail investors was the greatest we've ever seen, even more so than what we saw during March. So in other words, we've had this big ramp up, and during that ramp up, retail investors have been selling at an accelerating pace. So there's just a lot of skepticism. I will say for the first time this week, got a couple of calls about folks that have been in cash wondering what to do now. So a little bit of that fear of missing out is starting to come in. But, the old saying is that bull markets start on pessimism, they grow on skepticism, and they mature on optimism. I think we're moving a little bit from the skepticism side, maybe towards a tinge of optimism, but it's just a tinge at most at this point.
And so, obviously we've all talked the divergence to death, but certainly the economy is reopening to some extent. Have you changed your base case on what you think the labor market or GDP might look like by the end of this year? And how much is that factoring in to your thinking in the market right now?
Well, more of the path of the economy has been factoring in. Back in March, we actually rebalanced and raised equities. And our premise back then is that the market was already pricing in a recession. Historically, markets bottom about 5 months before a recession is over. So we think right now the economy is bottoming right now, and the recession likely is going to be over sometime either this month or the coming month. That doesn't mean that we go right back to where we were. It just means we hit the trough. Our base case on the economy is that we likely don't recover the old highs until early 2022. Yeah. One last point, Maz, before I forget. We also did a study just on this path is when we looked at the worst quarters of economic growth. So we looked forward and said, okay, how does the market act?
Yep.
Historically, once we've seen quarters of 4% or more on the negative side, for the economy, for the stock market, a year later, you were up every time. So that disconnect is normal at the early stages of a bull market.
All right. Keith Lerner with Truist SunTrust Advisory Services. Always great to get your thoughts. We'll have you back soon. Stay safe. Take care.
Great. Thanks, guys.